He's a market expert who we tune into very often to get perspective on what's being said and what we are currently seeing in the market. So, Mr. Subramaniam, you heard the finance minister. She's downplaying the heavy FII outflows as mere profit booking after these FIIs have made handsome gains, like she says. Do you agree with that assessment, or do you think there are deeper concerns?
I agree with the fact that they're going out making profits. Now, whether they're going out because they made profits is only something an FII can answer. But I can tell you today that the FIIs have been selling from September. Okay. So September to now, the Nifty has lost 6%. Okay. So they are the ones who caused the loss by their selling. So the guys who went in September, October, November, December all made handsome money because the rupee has depreciated only about 3%. So even net of rupee depreciation on a rupee term, they would have still made a profit. But I would also like to not club all FIIs as one way, that is not short term. So you have longer term FIIs like sovereign wealth funds and pension funds and insurance funds. You have active mutual fund managers who are 3 to 5 years. So now, after the correction for the last 6 months, out of 6%, today, if you see 1 year, Nifty is still positive 4%. So a person who came back 1 year and left it today still made 4% positive. Yes, the currency would have taken away that, he would have made a marginal profit. Now you take a 2 year, he's made 28% return, absolute. And a 3 year has made 32% return, even today after the correction. So an FII who came in 3 years ago is leaving today even as at a profit. So I agree that no FII is going to go out at a loss, right? He will wait for his time. So the people who are leaving, yes, are making their profits and leaving. Now, whether they are leaving because they have made enough profits, I don't think so, because they are seeing better opportunities in a risk-free US debt trade where the government is giving 4.5%. So in the private sector, you would probably get an arguably better return without currency risk. So the opportunity spaces are better.
Yes.
But yes.
But Mr. Subramaniam, clarify this for us. When exactly do you book profits? What are you expecting to happen in the future? Is it because other markets are looking that much more attractive, or because you see a downturn coming?
So two things. So in November and December, hedge funds book profit in order to pay their fund managers bonuses. So there where they have made the best return. In December, Indian markets have given very healthy 1 year, 2 year, 3 year returns. So that November, December, those who booked profit were booking profits to receive their bonuses, the fund managers. Okay. Now, the second aspect is, yes, sometimes fund managers do take action of booking profits if they see a downturn, right? And they fear they'll lose money. But I don't think India, even in a downturn with a 6.5% growth rate, we are the fastest growing country in the world. So it's not like India is going into a bear market or we had a couple of quarters of slowdown in GDP growth. Everybody knows why that happened. Government took its foot off the pedal on capex, and retail consumption because of inflation suffered. No, these are not permanent things. These will bounce back in time. So right now, tactically, because of this uncertainty, and that's where I draw your what the DEA said.
Yes.
There is global uncertainty that's undoubted with Mr. Trump every day coming out with something new. So the US dollar strength and the US interest rates being at a very high give them very profitable opportunities to invest back in the US market.
Yes.
So it's just about the opportunity being better there.
But Mr. Subramaniam, these FIIs are not moving out just to their home markets. They're also going to other global destinations. So is it about India becoming less attractive than it was because there are valuation concerns? There are global liquidity shifts. What are the real reasons you see?
So I'll tell you what, most emerging markets have suffered losses. Which is the emerging market which has made money? Tell me. I think it's not true that they're taking from one Indian emerging market. In the month of September and October, China announced a stimulus. So there was some money which moved there. They expected China bounce back. But that proved to be a false alarm. And the stimulus really didn't come through. But I do not think that any FII is pulling money out from India as an emerging market and putting into another emerging market. That happens, I'll tell you when. When oil prices shoot up, then commodity exporters like Russia, Brazil, they tend to get an allocation away from India. But that's not been the case. Oil has been pretty stable and flat. And with Trump doing drill, baby, drill, oil is expected to remain flat. So I do not think at this particular point in time, the FII profit booking is from taking from one emerging country like India to another. It is only either to go back to the US or to in debt or in US equities. I don't think there's any other plausible reason at this point in time for FIs to sell down. India has not gone into a long-term growth decline.
Yes. You mentioned year on year how we've done as far as the index is concerned, but this year we've slipped more than 3 percentage points. So, what level should investors watch out for? Yes, there is current volatility, and that's something that the DEA secretary is also alluding to, but he says this is short term. Do you believe that as well? Or are we in for a deeper correction? Or is this just going to be a passing phase before we get another leg up? Where do you stand? Which camp?
So I think that from a foreigner's perspective, the valuation, one of the ways to look at it is the market cap to GDP ratio. We are at about 112% now. And generally between 90 to 115% is considered slight overvaluation. So I think despite the recent correction, Indian market is still slightly overvalued. So I would say another 5% correction would take it down to the realm of reasonable. And the Nifty also 1 year forward P is hovering around 21, which is just above the long-term average. So I don't think much longer you need to wait, maybe a 5% more correction due to FIIs, and then Indian markets will look reasonably valued at the large cap end. The mid and small cap, of course, the pain factor is different, but FIIs are not concerned about that.
I think FIIs are coming back in a rush. A very small answer if you can.
FIIs will come back in a rush if the Russia-Ukraine war, if there is a solution found by Trump's team with them, then there'll be a huge relief rally and a risk-on rally, and India will be the biggest beneficiary of it. So I think that's the big trigger by which you will see FIIs lining up to invest in India.
That's the other big story we are tracking, Mr. Subramaniam. Tonight, we are looking at the possibility of peace deals. But of course, yes, Mr. Zelensky has his own views. We'll discuss that in a moment. But thank you very much for joining us. It's always a pleasure getting your perspective on the markets.